Good afternoon, everybody. Thanks for logging on today and joining this webinar hosted by Giant and Qdos. We've got quite a few people in the room and the numbers are still accelerating. So I'm just going to give it 10-15 seconds or so to make sure we've got everyone in the session. Just whilst we're waiting for people to join, if you can just have a look at the functionality on the toolbars at the top, there's a Q&A section. So feel free, as Nicole and I go through today's session, for you to post questions up there. We always try and leave 10-15 minutes at the end to address those questions. So please do pop them in and we'll try and get to as many of those by the end of the session as we can. Still got a couple of people coming through. And like the numbers are starting to slow down now, so I think we're probably in a position where we can get started. So good afternoon, everyone. Thanks a lot for joining today's session, where we're going to look at the recent changes and updates that we've seen from an IR35 perspective. I'm Dan Haslam. I'm Group Sales Director for Giant. So I'm basically responsible for helping clients and hirers and recruitment agencies to manage contingent workforce activities. I'm going to host today's session, and I'm really pleased to be joined today by Nicole Slowey, who's Operations Director for Qdos. Nicole focuses on supporting hiring organisations and agencies to manage their contractor labour force. She's worked with over 200 agencies and hiring organisations across a range of industries. She's seen firsthand how important it is for compliance to be met and how operational standards can be maintained. So welcome, Nicole, and thanks for joining.
Yeah, thank you for having me today, Dan. Excited to be here.
Cool. So today's session is probably going to be about 40 minutes or so, and then 20 minutes at the end. And what we're looking to try and do here is update you on a number of topics related to our old friend IR35 and just share some of our thoughts with you on how these updates could potentially impact contingent working in the UK. I think it's fair to say over the last couple of months, there's obviously been a number of high-profile IR35 case rulings. Worker tax misclassification obviously continues to be a hot topic and something that businesses want to keep an eye on. And so we're going to expect lots of questions. As I've said at the beginning, please do put those into the Q&A as we run through. But in essence, we've got several topics that we want to cover. We'll start firstly by looking at the recent IR35 case updates and what the sort of implications there could be for future. Nicole will run us through updates to HMRC's employment manual and small companies thresholds and how that might impact the market. Nicole will then go on to give us an update on HMRC enforcement activity and how she helps businesses mitigate risk. Hopefully there'll be some practical takeaways for you guys on that. And then at the end of the session, I'm going to finish by looking at the umbrella consultation, which is quite timely. There was an update on that this week on Tuesday, and we'll look through the potential implications of that consultation for both recruitment agencies and potentially end hirers, and then Q&A at the end. So let's begin then. We've taken a look at the recent IR35 case updates and how that informs us about how the courts are now currently applying the law. Nicole, it'd be great if we could kick us off by just starting to run through the cases and what's happened and the highlights for us, please.
Yeah, sure. Like you said, Dan, it's been a really interesting few months in the IR35 space. There's been a lot going on. And kind of one of the most notable cases to kind of talk about that we heard the outcome of in January was the Brian Robson IR35 case. So this is actually quite an interesting one because it kind of resulted in a majority win for Brian Robson, but he didn't win in every area. So if people aren't aware, Brian Robson is an ex-Man United player. He's sort of occupied, as many ex-football players do, a kind of ambassadorial role within Man United and has done so, I think, since kind of 2008. And ultimately, HMRC were investigating 6 tax years in respect of Brian Robson's engagements with Man United in his capacity as a global ambassador. So that was tax years from 2015-16 through to 2020-2021. And interestingly, with this case, HMRC actually conceded that around 4.5 years of contracts were actually out of scope because the contracts themselves were actually held in Brian Robson's name individually. So some people might remember that's actually quite similar to some of the outcome of the Gary Lineker IR35 case. So what that essentially then left for the tribunal to consider was a sort of 18-ish month period to establish whether the engagement Brian Robson had with Man United was one of employment or self-employment. Now, another unique aspect to this case is the fact that actually the income under the ambassadorial contract split into two. So there was fees and monies in relation to personal appearances that Brian Robson was contractually required to make. And then there were also an element of fees and payments in respect of image rights. Now, this is actually the first time that image rights have come under consideration as part of an IR35 inquiry. And fundamentally, where the tribunal landed was that the income in relation to Brian Robson's image rights were not subject to the IR35 rules and out of scope, but that ultimately for the appearance aspect of the contract in that 18-month period, that would be subject to IR35 and it'd be considered a kind of deemed employment relationship, largely down to key aspects surrounding kind of financial dependency. So Manchester United was Brian Robson's only client. Personal service, naturally by the nature of the service, he needed to be the one providing the services. He was very much seen as part and parcel of the organisation, and I think a pretty pivotal one again was the control and the degree of control that Brian Robson was actually subject to as part of his contract. A really interesting case that the point around the image rights makes it different to anything that we've seen before. The fact that HMRC conceded that certain aspects weren't certain contracts were actually precluded because of the nature of the contracts being held in his name personally, make it a bit of an interesting one. But I suppose that the key thing for people to remember is first-tier tax tribunal doesn't set legal precedent. So whilst it's an interesting case, whilst it shows the evolution and the changes and the continued evolution that HMRC has with managing IR35 cases, this actually doesn't set precedent, but it's another kind of mixed bag of response for both the individual contractor and Brian Robson and HMRC in terms of the overall result. But it was definitely an interesting one for people in the kind of tax status space to review because of the specific nature of it.
Yeah, super interesting. I think we'll probably touch on this point throughout. It's such a big marketplace out there, lots of different types of workers doing lots of different things, that it's never a sort of one size fits all. So quite nuanced. And I wouldn't have thought you come across too many image right issues in sort of day-to-day contractor space.
Definitely not.
But what do you think? Do you think there's any other points there or any other implications for contractors or hirers with regards to managing that risk based on the outcome of that case, Nicole?
I think it's a tricky one because, like you said, it's especially nuanced and similar to PGMOL, which we'll give a bit of a reference to further, Nicole. That was another kind of high-profile employment status case last year where we found the outcome, where again it was a specific, unique set of circumstances. I think ultimately all of this kind of HMRC activity points back to making sure that the intention of the parties is clear when people are engaging limited company workers on a self-employed basis, that the contracts need to be airtight and that the contracts ultimately correctly reflect the intention of the parties and what the expectation of the work is going to be, and that they reflect the reality of how those services are actually going to be delivered by the individual. So whilst there are some not kind of real direct and obvious lessons to be learned, it just further reinforces the complexity around IR35 and employment status generally, and the emphasis that it puts on the contractual piece, especially when it comes to a defence situation. If a client or a hirer or a fee payer ever finds themselves in a scenario where they're going to have to argue against HMRC, that contract point becomes so important, and it's a foundational part of any defence when you're considering employment status.
Yeah, and I suppose it also just again reinforces that from HMRC's perspective, from enforcement, they do like going for these high profile
Yeah.
cases, gets in media interest, it increases exposure to people understanding that there are risks here as well. And that would, that seems to be a little bit of a theme with some of the sporting people that they've been looking at.
Definitely.
Okay, so with regards to sort of further updates that we've had, you mentioned, or we've mentioned that there's been updates on the employment status manual recently and some updated case law. So it'd be interesting if you could point out to the recruitment businesses and the hirers on the call what they need to know about these updates and the impact.
Yeah. So for anyone who isn't aware, HMRC has a kind of Bible, if you like, of documentation surrounding employment status that it refers to as its employment status manual. It's a publicly published manual, but actually the intention of the manual is that it is used by HMRC inspectors in order to manage the steps and the various processes and endeavours that they go through when they're actually investigating a case under employment status. So it covers off in quite prescriptive and specific detail how HMRC interprets certain status tests and how that interplays with case law. Now, at the top of this, what I would say is it's important to point out that the employment status manual is only guidance, and it's guidance that's used by HMRC in its pursuit of managing tax compliance. It's not necessarily law, and it isn't kind of verbatim as far as how tax advisors would necessarily view status. So in kind of a few weeks back in February, we saw HMRC update 6 sections of the ESM. Surrounding predominantly control and mutuality of obligation. And we also saw HMRC introduce a new section, which is titled the evaluative exercise at the third stage of ready mixed concrete. And I'll go into that in a little bit more detail. But fundamentally, the HMRC's updates were really to bring PGMOL into the case law it references in the employment status manual. It updates it regularly. So before Christmas, we had an update in the ESM to reflect Kickabout and also Athol House, so the Key Adams case. So it's not unusual for them to update it. So when we saw the update coming through in February, it's clear that all the changes were made to reflect the big case in the Supreme Court for PGMOL. The unusual one about this is whilst the Supreme Court case has remitted the case back to the first tier tax tribunal, it does in fact set precedent and case law. So HMRC obviously wants to ensure that its inspectors have that point of case law and as their interpretation of that case law in their arsenal when they're actually engaging in tax compliance activity with individual taxpayers and or businesses in the supply chain. So as far as the specifics of what was updated and how organisations should be aware of it, like I said, it's reflecting case law. It's not necessarily changing anything massively. It kind of sort of solidifies and sets in stone a little bit more of HMRC's perspective, but organisations should absolutely be doing a bit of a deep dive into understanding how this may impact aspects of employment status within their population of individuals within their business. So, like I said, mutuality of obligation was a key part of what's been updated. In PGMOL, the Supreme Court ruled that mutuality was present, despite the fact that both parties had the right to withdraw before the services actually began. And essentially that just reinforced HMRC's view that where there is a contract and payment for services, that there is in fact mutuality of obligation present. So that's been firmed up in the ESM. Control was another one that was firmed up in the ESM through multiple sections. I'm not going to go through them all, but we'll pop the link in the chat to the ESM so that people can have a look in their own time. But fundamentally, it really emphasised the concept of a kind of a broader framework of control, which came out in PGMOL. So where there were kind of codes of conduct, match day procedures, merit tables, the fact that referees could in fact be reprimanded after a match, all alluded to the suggestion around the framework of control, and it reinforced the point that that right of control doesn't need to be present at contract either. It can be implied, and that it can be considered both negatively and positively. So it's the concept of the fact that control can be exercised during and after the fulfilment of services. So a really interesting one there, and a lot that organisations should probably be doing a bit more of a deep dive into. We certainly are, and we're going to be updating our guidance surrounding those kind of key status tests as well. And just in summary, the addition of the evaluative exercise is more of an explanatory note, so that HMRC can explain that the third stage of ready-mix concrete, where this multifactorial assessment needs to be undertaken, where it will consider things like financial risk, the individual's kind of position of being in business in their own account, all comes under this third stage of ready-mix concrete, and it just ultimately explains that in a little bit more detail. I think ultimately what this does just assert again is the complexity around assessing employment status, and that when it comes to any defence or attack approach that HMRC has in pursuing companies and individuals under IR35, that it's tricky, and that there is a lot to consider, and that a lot of the facts are nuanced and can be difficult to evidence, and parties will often have different views on it. So I think it ultimately comes back to organisations needing to ensure that they have specialist expertise and support when they're considering aspects of status, whether that's introducing policies and procedures, how you regularly audit your own adherence to employment status through whether it's general status or IR35, to make sure that if you're engaging with HMRC, you know exactly how to handle that, to manage that, and making sure that you're on the right side of it from a compliance perspective.
Okay, cool. I mean, yeah, it's definitely reinforcing some of the themes that we're already aware of, but interesting that it's sort of evolving over time and they're going into more detail with the handbook in their approach. We've also seen, Nicole, an update from HMRC in relation to the small companies threshold. So it might be useful if I just give the audience a bit of a reminder as to currently you're defined as a small company if you satisfy 2 of 3 tests. So the first one is if your annual turnover is not more than 10.2 million, or if your balance sheet total was not more than 5.1 million, or if you have no more than 50 employees. If, as a business, you can tick 2 of those 3 criteria, then you're viewed as a small company. Now, from an IR35 perspective, that's important, because what that then means is if you are defined as a small company, you're exempt from the off-payroll working rules. So just to be really clear, not exempt from IR35. IR35 always applies, but you as the hirer don't need to be doing a status determination. That's the responsibility of the contractor to determine their status, and it's also the liability of the contractor as well. So interesting, Nicole, if you can run us through what changes are happening here and what maybe the implications could be.
Yeah, sure. So this change is actually a change to the Companies Act. And actually the IR35 implication is a sort of byproduct of the Companies Act change. It was something that the previous government had launched and said that we're going to do. And it was bizarre because it was really, really kind of poorly reported on, and no one had necessarily known a huge amount about it. With the government change last year, it was kind of postponed, and we hadn't heard much about it until kind of the back end of last year, where it was confirmed that the Companies Act changes were coming in. But fundamentally, the Companies Act changes are there to support business and reduce kind of unnecessary administration and reporting requirements on companies. So a lot of the thresholds are actually increasing on the kind of turnover and balance sheet value by about 50% in terms of organisations being classified as large, medium, small and micro. So for the IR35 point specifically, it's about what this small companies threshold is and how different is it actually going to look and feel. So in terms of those thresholds that you had mentioned, Dan, where we say today the turnover threshold is less than £10.2 million, that's actually going to be £15 million going forward to be considered small, so quite a sizable increase. On the balance sheet total, it's moving from 5.2 million to 5.1 million to 7.5 million. The employees threshold is remaining the same, so that criteria is going to actually see 14,000 companies move from being considered medium to actually be considered small. So ultimately, if any of those 14,000 companies engage limited company contractors, they will no longer have a requirement to consider the IR35 status of the workers. They will be exempt from applying IR35 off-payroll rules, but the workers themselves will then have to apply the Chapter 8 part of the IR35 rule. So they are then responsible for considering their own IR35 status, which is a bit of a change. So that takes us kind of back to the pre-reform rules. Equally, any company who may have been moving into the medium category, who is maybe on the precipice of assuming some IR35 responsibility, that could in fact be pushed further away because of the changes in threshold. What I think is important to point out at this stage is there is a bit of kind of lack of clarity as to when, and companies from an IR35 perspective will feel the impact of this. So the changes are coming in on the 6th of April 2025, so new tax year that's just a few weeks away. The Companies Act considers repeat periods for companies in respect of the start of a company's financial year. When it comes to applying the criteria under the off-payroll rules, what it actually looks at is the tax year in relation to the reporting period. So if you think about it from a company perspective, your reporting period is ultimately 9 months from your financial year end, from when you need to file your accounts, and the application for the criteria under the off-payroll rules is in relation to that date and the closest next tax year. So what's not clear is actually when companies will be able to see the benefit of that change. So whilst it's applicable from April 25, the Companies Act considers it from financial periods starting after April 25. That's not directly going to be the case on the off-payroll side of things. Qdos have, and we know of many kind of other tax status specialists out there, have put questions to HMRC for clarity and guidance on it, because it's not clear. It's quite a technical point, and I know there's been a lot of kind of conflicting reporting of exactly when companies are actually going to see the impact of the change. So at this point, under the off-payroll side of things, we don't yet know exactly when it could impact, but it's based on the current drafting of both the Companies Act and the ITEPA, where the IR35 rules sit. Our view is that we don't believe it would benefit companies under off-payroll immediately, and actually it could be a couple of years from now where the companies would see that benefit. But ultimately, we need to wait for HMRC guidance to kind of confirm that position exactly. But it's definitely an important point to raise, so that companies don't immediately kind of fail in any obligations that they either continue to have or start to have because of the timing around the changes.
Yeah, it's interesting, because I've definitely noted a few excited comments on LinkedIn where people have said this is potentially significant and perhaps a positive change if you're looking at trying to engage people outside of IR35. But I'm not, you've made a point really about this being pushed out into the distance. I'm not entirely sure if it is as significant a change as some have said. I don't know if you've got any thoughts on that before we move on.
I think, like I said, it's so the estimate 14,000 companies will now be considered small instead of medium. Now, what we don't know is how many of those companies actually engage off-payroll workers and engage contractors on an outside IR35 basis. So it's difficult to estimate the actual real life impact from a company perspective. I've certainly got some clients that I've been advising who are actually on the precipice of the threshold, and actually in the next financial year, the next tax year, would be subject to applying the rules at the current criteria, but that's changing for them. So I think whilst it's welcome and it kind of takes the burden off of those smaller companies, and we recognise that smaller company is now slightly bigger than the previous definition, I don't think it's going to have kind of a massive wave effect through the population of PSCs out there. But it's a welcome change in any case. So subject to is getting absolute clarity on exactly when organisations can apply the criteria to their businesses.
We'll hold on to that welcome move, because I think most of the moves that we're seeing at the moment from government may not necessarily be as welcome. Nice to hear that there's one there. Okay, so now let's move on to HMRC enforcement activity, and what insight you can perhaps share with the audience on how you've seen HMRC recently reviewing how companies are managing their IR35 obligations.
Yeah, so I think the last time we caught up in one of these webinars, I think I probably would have said that we're managing around a couple of dozen off-payroll cases on behalf of clients and supporting them through their kind of compliance checks with HMRC. And for us, that's still the case. We are seeing HMRC take an increasingly detailed approach. We still have some cases we've had a couple of cases entering their second and third years. So you can understand from a client perspective how time consuming and how concerning that can actually be. So HMRC are taking a super detailed approach. They're getting into the absolute nitty-gritty around key status tests and how they exist in a hiring organisation, both at contract level and also in reality in terms of how contractors are providing their services. And like we've seen in cases before, the differences where those two things don't necessarily align. So a huge amount of focus and attention on that, huge amount of focus on attention from an education and a training perspective. So HMRC really want to know, what have organisations done to upskill the people in their business who either are responsible for the assessment of the status assessment of workers, or who actually actively engage with the workers themselves and want to know what you've done, why you've done it, how regularly you've done it, which again is all important from a compliance perspective. Additionally, the other types of things that we've seen, and we've talked about this before, is the focus on contracted out services, uses of statements of work. Again, HMRC really want to know from a hirer perspective, what due diligence have you yourself done to establish whether the fact that you think that is contracted out, the fact that you don't consider you to have any IR35 responsibility for contractors in that supply chain, and that it's the responsibility of the supplier. So really honing in on those areas. And I think for me, what we're kind of seeing as well is just HMRC being really, really diligent on detail and asking a lot of questions. And I think it comes back to organisations recognising that IR35 compliance approach needs to go beyond just having a process for status determination statements, that it is a series of compliance measures, and that there are multiple aspects that you need to consider to be able to demonstrate that you have undertaken an appropriate amount of reasonable care, the right amount of due diligence, that you have appropriate record keeping and processes and procedures and training in place to ultimately support that. But in positive news, we did get confirmation just before Christmas of us actually closing down our second off-payroll compliance check. So we have a large engineering services client who had been engaged in a compliance check with HMRC for about 19 months. We were able to kind of support them insofar as being able to really demonstrate, and this client is a perfect example of, we have the good record keeping, we have the robust processes around assessing contracted out services, and that's something that we had supported the client with, that they had robust guidance and support for the hiring community when engaging limited company contractors, and could ultimately demonstrate to HMRC that they had taken a really, really set the bar high as far as actually managing that compliance. And that's something that our kind of tax team were able to support them through every stage of that engagement with HMRC, and ultimately get to a positive resolution at the end. So whilst lines of inquiry and compliance checks seem to be taking on average at the minute between 18 months to kind of 2 years, HMRC is demonstrating that there is a kind of light at the end of the tunnel as far as their approach and supporting organisations and engaging organisations through these. But like I said, that we'll take that with a pinch of salt, because we have some cases that are kind of edging on that 2-3 year period as well, where it doesn't quite look like they're going to be closed anytime soon. So it's a tricky one, but HMRC is continuing in the vein of making sure that there is compliance in supply chains where limited company contractors are being used, and are really going into the depths of detail with hiring organisations to ensure that level of compliance is there.
No, well, congratulations on the case study there.
Thank you.
Business. Shows that it can be done if you put the work in. Although I think it's really interesting to hear the steps you need to go through there. But my goodness, it's slow progress, isn't it? That's for sure.
Yeah, no, it definitely is.
Okay, so we also saw, I think in late January, HMRC published some more updated compliance guidance. We did say they've been busy in these first few months. They issued some further guidance emphasising the importance of due diligence in the labour supply chain, which is a topic that we're always talking about on these webinars. So given that we've heard that HMRC are continuing to increase scrutiny on compliance failures, what specific steps would you advise your clients, hirers and agencies to be taking to ensure that supply chains are robust, and how do they assess the credibility of a supplier and I suppose also payroll providers that they engage with?
This is a really interesting one, and I think you're right in that it's just another step that HMRC is taking on this journey of really, really focusing on compliance and labour supply chains especially. GFC12, as it is very catchily labelled, so labour supply chain assurance and compliance, really centres around organisations where there are layers and layers of suppliers in a supply chain where the labour is being provided. It covers and considers organisations where you ultimately need to think about IR35, employment status, agency rules, construction industry scheme, managed service company legislation, the use of umbrella companies, mini umbrella company fraud. It's a lot, and I think that it's a welcome and positive step from HMRC to kind of outline that. I think that how they've set out the pillars of compliance focus on due diligence, risk assessments, risk management, and this kind of need to monitor and continuously review. And I think for me, the due diligence point is the most important, because I think that a lot of organisations and supply chains and hiring firms or large recruitment agencies and staffing companies, I cannot stress the need for visibility of the supply chain in terms of who your suppliers are, how the suppliers are engaging workers, who is the employer for the worker, do you have any off-payroll workers in that supply chain? So that due diligence exercise where you are doing as much fact-finding as you possibly can in respect of your suppliers is especially important, where in labour supply chains it's super common for there to be multiple tiers of suppliers. And I think that that's the key thing that organisations in the supply chain also need to be aware of, as well as be a good supplier is a kind of funny term to use, but being a proactive supplier in terms of your willingness and openness to participate with your clients on the provision of information in a timely fashion, adhering to the fact that there might be codes of conduct and various other aspects that you need to consider as a supplier. So for me, that due diligence piece is super, super, super important, and lots of procurement departments will have really well established processes already for having that type of work in place. And you know yourself, Dan, we've talked a lot about this before. It is tricky because there are so many different pieces of legislation that businesses now have the obligations to consider, and making sure that you cover all bases whilst not being a blocker to actually getting the services that you need as a hiring organisation is tricky for businesses. So I think for me that the due diligence fact-finding piece is super important. Second to that is actually risk assessing what you find. So thinking about, okay, right, well, we've got this information from these suppliers. What does that actually mean? Are we exposed to anything? How are we addressing these challenges, these areas of tax in our codes of conduct, in our contractual terms? What provisions do we have to exercise requests for specific pieces of information, for kind of reviews with suppliers? That's really important. And that kind of nicely links onto the kind of risk management piece, which is introducing processes and procedures where you're regularly checking in with suppliers, and that there are proper points in the calendar year or throughout the period of a particular contract where you are checking in with suppliers. So for example, is checking in with suppliers, okay, well, has there been a change in the use of off-payroll workers? So you've told us that you actually only use on-payroll workers. Has that changed at all? And if it has, okay, well, is there a reason why you didn't notify us? So there's all these kind of things to think about that you can check on an ad hoc basis with suppliers. And I think the key is it needs to be proportionate. It should be proportionate to the size of supply chain that you have and the number of parties in supply chains, but making sure that you have the provisions to be able to request information from each of your suppliers as to the makeup of the downward supply chain is super important. And that all comes back to that monitoring and review piece. And I think with the direction of travel that we've been on the last 2 years, I think organisations having robust processes within their procurement function, within their legal function, HR functions, and making sure there's a kind of unified approach to managing risks in labour supply chain. And more often than not, that probably will require hiring organisations are large recruitment agencies and managed service providers, bringing in additional expertise and resources to help their compliance teams and their legal teams and the procurement teams to make sure they're on the right side of this ever-evolving kind of legislative landscape that, like we said before, is continuing to change at the minute, and businesses are going into another era of learning new pieces of legislation and having to tackle kind of additional challenges from a tax perspective.
Yeah, I think it's interesting. We're going to talk a lot more, a bit of a deeper dive on supply chain compliance, specifically with umbrellas and the consultation in a second. But I think just sort of wrapping up on the IR35 piece, I think you really illustrated that the government and therefore Treasury and HMRC are obviously looking at all the ways where they can increase the tax take so they can fund, their the policies that they want to do in the social and the healthcare place in particular. And I think it's obvious that increased enforcement of IR35 is obviously going to remain key there. Although interestingly, yeah. I did see one post a couple of months ago on LinkedIn that was suggesting that IR35 repeal could be on the cards. But I think given the direction of travel that we see from the government, I and the rest of the LinkedIn community would be fairly stunned if at this stage they were going to do anything there. Anyway, let's move on then to that last topic and give all you guys an update on the umbrella consultation. So HMRC did an update just on Tuesday this week, actually, to their umbrella consultation titled "Tackling Non-Compliance in the Umbrella Company Market," and we've now got a little bit more detail as to the direction of travel. So what I wanted to do here basically is just run through some of those highlights. It's a really, really lengthy document. It runs for pages and pages. So I've tried to lift out some of the key highlights here for you so you can understand what they are. And then we can talk a little about what we think the impact could be on umbrella businesses, recruitment businesses, and also end hirers. So firstly, what HMRC have said in the update is that they are now going to be amending the Employment Rights Bill and effectively create a legal definition of an umbrella company. So at the moment, there is no legal definition of what an umbrella company is, and that will be a tricky task. But by the benefit of them then being able to do that definition means that they can then move on to regulation. And so once they've made that amendment, that will allow for the regulation of umbrella companies. And what the government are looking at doing is bringing umbrella companies in scope of the EAA regs or conduct regs, which are currently overseen by the Employment Agency Standards Inspectorate. So this really brings agencies and umbrella companies into that same body's field of vision. And then over time, that responsibility for the EASI will also move across to this Fair Work agency body that's being proposed as part of the employment bill, which again we also saw some updates on this week. So effectively, what we've heard here is that we're going to have regulation of a previously non-regulated industry, being the umbrella market, and certainly giant many other umbrella companies, trade associations like the FCSA have been calling for regulation for a long time. So I think just generally, I think it's welcome that we're now having this, and I think it's in the interest of everyone here, and in particular workers, that these non-compliant umbrellas are pushed out of the market where feasible. And what the government also want to try and ensure is that umbrella workers effectively will receive the same employment rights as they would do if they were employed directly by an agency. And of course, those rights are also being increased with the proposed Employment Rights Bill changes that we saw updates on again this year. So I think most umbrella companies already operate on an employment contract basis rather than an agency worker engagement, but it's obviously a really large market. There's obviously nuances across blue collar, white collar, and different industry sectors. But I think in essence, the need for wanting workers to have the same rights as working via an umbrella, when they work for an umbrella company as they have with an agency, should be an obligation that umbrellas are more than happy to fulfill, even with the increased rights and obligations that are coming through the bill changes. So that's on the employment side. So if we then look to move on to the tax piece and how they're looking at taking measures to deal with the risk here and sort of drive these non-compliant providers out of the market. it's probably useful just to do a quick recap of how we got to the point we're at now. So if you remember, the previous government, the Conservative government, began the consultation. And within that consultation document, they proposed 3 potential avenues where non-compliant activity could be tackled. The first one was mandating due diligence. So a little bit touching on those supply chain points that Nicole was running through there, effectively making it a statutory requirement for an organisation like a recruitment business or an end hirer, if they're engaged directly with an umbrella, to take mandatory due diligence checks. Option 2 was looking at passing the tax risk. So in the event a non-compliant provider was engaged, that provider did not pay the right level of tax, and effectively then moving that tax piece to the recruitment agency. And then the third option was actually making the agency or the end hirer liable and responsible for that tax deduction. Now, HMRC in the consultation updates have spoken a lot and commented upon the thought process around these options, and effectively they felt both option 1 and option 2 just didn't go far enough for them. And in particular with option 2, they'd need to effectively prove that an umbrella company was non-compliant before they went to try and recover any tax loss, and that would just take too much time in their opinion. So what they've chosen to do is opt for that option 3 piece, making the agency responsible for the tax liability and any potential shortfall if they choose to engage with an umbrella company. So we don't have specific detail on exactly how this will be managed. There's obviously going to be some key considerations around things like the PAYE so which one of those is going to be used, how's the payments going to be made back to HMRC for those taxes. I thought it was interesting, and I've lifted a couple of paragraphs from the update, which I'll just read out to you guys, in the consultation, where HMRC says, if the worker's full gross pay was paid to the umbrella company and it did not correctly account for PAYE, then the agency is the entity now with ultimate responsibility for the operation for PAYE would be liable. So clearly they're keeping the option open there for agencies to pay gross to the umbrella company if they chose to. And then they then go on to say, although many respondents to the consultation thought that being responsible for operating PAYE would mean that the employment business would have to take payroll in-house, the policy also allows employment businesses to continue using umbrella companies. The policy's intention is that because employment businesses hold responsibility for PAYE, they would only use highly trusted umbrella companies with which they are already contractually engaged with and have completed due diligence on. So I think it's really clear there in terms of the document that HMRC is saying that umbrella companies can absolutely be used moving forward should an agency wish to outsource the tax and the employment obligation, and they recognise the role that compliant providers pay there, but it's specifically going to be the agency closest to the hirer that will ultimately be liable if there's any shortfall in tax payment by that business. And that's an interesting point to make, particularly when you think about managed service providers, because for an MSP provider, they are effectively the agency closest to the end hirer, and so they'll actually be responsible for any non-compliant payroll activity that's happening with any second-tier recruitment agencies that pop up in that supply chain. So from an MSP perspective, this is going to be particularly challenging in terms of the liability there, and they really do need to make sure that due diligence is being done throughout that supply chain, which they already would say they do, but this is just going to make that liability for them really real in that respect. So I think also just to be clear, if the umbrella company is directly contracting with an end hirer, so if there is no recruitment agency in that supply chain, then these obligations fall on the hirer. So the hirer is going to become liable for any underpayment of tax. So in terms of when HMRC are saying that this will come into effect, this will be effective from April of next year. And HMRC have said in the update they expect it to raise an additional £500 million worth of tax revenue in the 29-30 tax year. So it's interesting that they've put a number against this as a measure. That's part of the consultation process, and it'll be interesting to see what they report back there given that there's been a lot of noise about the size of non-compliant activity from umbrella companies. So in essence, what does this mean? It means agencies need to use compliant providers, or they're going to face these future tax bills. I think in terms of how recruitment agencies will react to these changes, I would expect a lot of agencies will look to consolidate their umbrella preferred supplier lists further. You may see some agencies look to take some workforces on in-house payroll, but I think also with and in light of the increased employment risks that are coming down the pipe as well, certainly from the conversations that we've had with a lot of recruitment businesses, there still seems to be a desire that they want to continue to outsource the employment to a reputable umbrella company who will deal with the tax and then also take on those obligations, leaving them to focus on the search and selection and recruitment activity that they want to deliver for their clients. I think in sectors where often workers have a little bit more of a say over which umbrella companies they may use, and that's often seen in medical and social care sectors. And it's going to be super interesting to see if those recruitment agencies now will continue to allow workers to pick and choose which provider they may want to use, or if they're really going to start to enforce PSLs. From Giant's perspective, I mean, we're in a position now where we already cover bases here and have the software and payroll capability where we can process payroll on behalf of an agency or a hirer, or we can operate it obviously as our own obligation as well. So I think there's certainly options there and different ways that businesses may look at this. And I think just finishing up on the consultation, and one last point on there, the government also raised the question in the consultation about the operation of the flat rate VAT scheme, which is a part of the tax regime that was abused a lot by payroll companies referred to as mini umbrella companies. Now, what they've decided to do on the flat rate VAT scheme is to actually make no change, because they feel that by going down this option 3 route of making agencies liable, that in itself will go some way to prevent abuse of the flat rate VAT scheme, because there'll be a tax deficit that the agencies would need to pick up. So it's still a moving feast. We're expecting draft legislation to come out probably around July time on this. We may get some further updates, so we'll make sure that we keep you all updated as things progress. But as always in this market, there's plenty of change to keep us busy.
Yeah, there definitely is, Dan. It's a lot for, like we've said before, hiring organisations, recruitment agencies, in terms of the different aspects of legislation that they need to contend with and navigate. So thinking about some other types of implications that might happen as a kind of byproduct of the umbrella reform, Dan, do you think that there is a potential that we might see an increase in the use of PSCs again as organisations think about ways to navigate the change?
Yeah, I definitely think it's possible. I think that, agencies and hirers will probably now look at the risks around this, and, is there if we can't get control over the supply chain, is it potentially the case that they may see contractors move back into limited companies as an option and take the risk on IR35? Possibly, albeit, as you've pointed out in the beginning half of this, the HMRC is super active on IR35. We know that many contractors would certainly prefer to operate PSCs, so that could be an unintended consequence if agencies allow contractors to go down that road. But again, we know through the off-payroll working rules that there's a risk there for the fee payer as well. So it will be interesting to see how the market reacts. I think in the main, though, certainly the parts of the market that Giant operate in, given there seems to be some latitude in how the consultation's forming up, we don't necessarily expect too much change. But what I am interested in looking at is in these areas like medical and healthcare, where we know this non-compliant behaviour takes place. It's going to be super interesting to see how those businesses react.
Yeah, no, definitely. And thinking about some of the labour supply chain compliance points we were talking about earlier, from a recruitment agency perspective, what will be those kind of key compliance considerations for them for managing umbrella companies and their supply chain?
Well, I think the first one's probably certainly re-reviewing your processes and making sure you've got up-to-date records. FCSA has for a long time been a list that a lot of people rely upon, but it should never be in itself just a you know, the fact that someone's got an accreditation, whether it's FCSA or any other organisation. I think recruitment businesses need to go into the detail themselves and pull documentation and keep it updated on a regular basis. But I think outside of that, I think you're probably also going to see businesses looking at the balance sheets of umbrella companies to make sure, okay, if there is going to be liabilities here, can we get indemnities? I mean, we already provide indemnities in our contracts anyway, but they're only worth something if you've got a balance sheet that can pay out. So you're probably going to see perhaps a little bit of that, which is why I'm thinking that the PSLs may shrink and maybe there'll be some umbrella market consolidation. But
Yeah.
Again, it's probably too early to say. But these are probably some of the things that the agencies will think about.
Yeah. Obviously, since the implementation of IR35 reform in the private sector especially, we've seen a huge increase in umbrella company usage as a result of payroll reform. And actually, I remember having lots of conversations with hiring organisations at the time, educating them on the concept of what an umbrella company actually is, because they've been so accustomed to having PSCs, limited company contractors, for so long. It was a bit of an alien kind of subject to them. So they've obviously got more familiar with and now have a lot more umbrella companies in their supply chains. Do you have a sense of where this is on the radar of hiring organisations?
Well, I think on your point on definition, that's going to be interesting in itself. I think there's a lot of commentators saying, this will be tricky to see how the definition of an umbrella company bears out, because if that's not done correctly, then you could see models popping up maybe that try and circumvent that definition and try and get away from this risk. So that's one thing. But in terms of it being on the radar, honestly, I definitely don't think it's on the radar of hiring organisations. And the reason I wanted to talk about it today is I don't think it's on the radar of many recruitment businesses. You know, though you guys have been dealing with the employment bill and the ramifications, you know, the updates that we saw this week. There's been employers NI increases that everyone's been needing to manage as well. So I think this is a big change in terms of the umbrella piece and the risks. I think it needs to be on the radar, but it's just one of a number of things that are coming out that businesses are having to deal with. So I think from an end hirer perspective, they'll want to certainly pay more attention to who's operating in that supply chain. If they're engaged via agencies or if they've got MSPs, they're going to want more and more assurance around it. But ultimately, hirers and recruitment businesses don't want to be dealing with the complexity of payroll, tax and employment law if they can avoid it or if they can move it across to another party to manage. So I don't see that in principle changing. It just means that the bar has been raised in terms of the level of jeopardy of allowing a provider to enter that supply chain that's not doing things properly. And as I said right at the beginning, yes, there's some change here, but I think, you know, we all would like to see a compliant supply chain. We'd all like to see these types of providers driven out of the market. And if this change achieves that, then it's welcome. So I think that brings us to the end of all the topics. Thanks, Nicole, for those questions, just wrapping up there. As I anticipated, as we always do, we have got a number of questions that have been coming through, although we've only got 5 minutes to sort of pick up on some of those. So I'm going to drop into the Q&A and just have a look at a few of the questions and see if there's anything here that we can bring up for people to answer. So Nicole, there's one here about small company thresholds. Are the small company thresholds related to employment by the end client, the agency or the umbrella, i.e. the client I work for has less than 50 employees, but the agency and umbrella employee count and turnover are likely to be much greater?
Okay, so when it comes to the small companies exemption, what that's focusing on is who the party is that has the responsibility for applying the off-payroll rules. So that will apply to the end hirer in your supply chain. So if it's if your hirer is small by the definition, but you so happen to be engaged by a very large recruitment agency, that doesn't necessarily matter. It would be you, if your hirer is exempt, it would be you as the individual worker who would have the responsibility to consider your own IR35 status under Chapter 10.
Excellent. We've got a few people just asking for a reminder on the small companies thresholds. What we'll do is we'll make sure there's a follow-up document that goes out that'll just reiterate those thresholds so you guys have got the updated info. There's another question here again for you, Nicole. If a limited company is working for a small company, does the worker have to provide evidence of whether they are inside or outside of IR35? If so, what is accepted as evidence?
So there's no requirement under Chapter 8 that sets out that the individual worker needs to evidence their IR35 status to their client. We would always recommend that you should from a best practice perspective. And as far as what that evidence could be, we would always recommend that you have an independent review of your contract and your working practices. So an equivalent to a status determination, if you like, but that's something that you would need to go and facilitate of your own volition. So coming to a Qdos or someone like us, where we will give you an opinion on your arrangement, and actually if your hiring organisation is happy to participate in that, that actually adds a significant amount of weight to that in terms of them actively being involved in that determination. So whilst there's nothing that it's your responsibility and your obligation, you don't formally need to demonstrate that you have done that to a hiring organisation, but we would absolutely recommend that that's a good practice to get into, and actually making sure that you've got your own comfort around having had your IR35 status independently assessed as well.
Cool. And then question just coming now from Sean. Sean, good to hear from you. We've a question here on my part at the back end on umbrella consultation risk. Do you believe that MSPs will push that liability down to the recruitment agencies via contractual indemnities? And would that potentially create risk of MSC, which is debt transfer risk, basically? I would be surprised if not, Sean, given that there's going to be quite a big liability aggregation into those MSPs now across all those second-tier recruitment agencies. I think the interesting thing here is that part of that MSP service is supply chain due diligence and doing checks, and there's a lot of process that goes on around that, where agencies are asked to use and provide certain information. How stringently, though, a mandated PSL down from an MSP is actually effectively deployed down at the second tier recruitment agency level, I'm not sure. I think some are better than others. Certainly, if we go down a stage further in the contract chain and go down to an umbrella company like Giant, we already have indemnities and are happy to indemnify on tax risk to the agencies. So I think if an MSP is requesting that down, then that should be back to back and should be reasonable. As to the point on MSC, I'm not a lawyer, but in essence, the way that this risk is shifting, it's almost like debt transfer risk anyway. So what we're seeing here with the way the legislation is moving is it's just making it real for people. There's a real risk now, and it's okay to talk about supply chain compliance, but you absolutely must deliver it in that supply chain. Otherwise, those at the top of the chain are going to have real risk. If you can indemnify, probably is a solution they'll look for. But of course, indemnities are only, as I said in the talk, indemnities are only worth, based on the size of the organisation that's providing it. So it'll be interesting to see how this plays out. Well, that brings us to the full hour. Nicole, thanks very much for joining me. It was really super interesting. Thanks very much for running me through those IR35 updates. There are a couple of other questions coming in, which we'll try and address on the update that we send out. There'll be a recording where we'll follow up, and any useful links that Nicole and I think that are relevant to the talk, we'll add in there. Thank you, everybody, for joining. If you've got any questions on these topics or any specific cases you want to discuss, then Nicole and my contact details will be on that follow-up. And it just remains for me to say have a great afternoon and look forward to the next one. Thank you all.
Cheers, guys.